All right, so Rohit Chopra is the director of the Consumer Financial Protection Bureau. The CFPB is a unit of the Federal Reserve System charged with protecting families and honest businesses from illegal practices by financial institutions and ensuring that markets for consumer financial products and services are fair, transparent, and competitive. As director, Chopra is also a member of the board of directors of the Federal Deposit Insurance Corporation and the Financial Stability Oversight Council. Lots of acronyms in there. In 2018, Chopra was unanimously confirmed by the US Senate as a commissioner on the Federal Trade Commission, where he served until assuming office as CFPB director. During his tenure at the FTC, he successfully worked to strengthen sanctions against repeat offenders, to reverse the agency's reliance on no money, no fault settlements in fraud cases, and to halt abuses of small businesses. He also led efforts to revitalize dormant authorities such as those to protect the Made in USA label and to protect competition. The director previously served at the CFPB from 2010 to 2015. In 2011, the Secretary of the Treasury designated him as the agency's student loan ombudsman, where he led the Bureau's effort on student lending issues. Prior to his government service, Chopra worked at McKinsey & Company, the global management consultancy, where he worked in the financial services, healthcare, and consumer technology sectors. Chopra holds a BA from Harvard University and MBA from the Wharton School of University of Pennsylvania. Now he's going to make a few comments, and then we're going to be sitting here for a Q&A. So officially, welcome to the FDX Summit, Director Chopra.
Well, thank you for that introduction, and I appreciate all that everyone is doing in here to think about the future, not just litigate the past. Today, I want to discuss the status of where we are on accelerating America's shift to open banking. We, the CFPB, play a part of this, but many of you play an even bigger part. I want to focus on the role of standard setters and standard setting today. I then want to discuss some of the dangers of how the standard setting process can sometimes be weaponized in an anti-competitive way. I want to close with how standard setting organizations can anticipate becoming officially recognized by the CFPB. Now, all of you in this room know that the US has a clunky system when it comes to switching financial products. Moving to a new checking account with a better interest rate involves resetting direct deposits and recurring bill paying, printing new checks, and obtaining a new card device. Mistakes can be costly for everyone involved, and it's no surprise that the largest banks in the country have barely budged on their APYs but still retain their depositor base. Open banking will hopefully involve less red tape, more seamless switching, and so much more. Several months ago, as hopefully many of you have seen and was just discussed, we proposed some rules that will serve as one part of the foundation of the acceleration to open banking. The rules rely on a dormant authority under Section 1033 of the Consumer Financial Protection Act, which gives consumers rights to access their data. The rules also seek to ensure that sensitive personal financial data is safe and private. We are quickly in the process of finalizing these rules, reviewing feedback to our proposal, coordinating with our sister components within the Federal Reserve System, and thinking through enforcement with other regulators. As part of this process, there is growing discussion about how to set relevant industry standards, including data standards and sharing protocols. These standards are super important to make sure the system is open and interoperable. The proposal we issued last year recognizes the critical role of standard setting and how that will play in open banking. But the proposal purposely avoids micromanaging or dictating prescriptive technical details. We all probably recognize the importance of standard setting. Electronics in the US have a common set of plugs that fit into outlets installed in our homes and offices. Motor vehicles sold in the US are designed to drive on the right side of the road, and the steering wheel is in a certain place because of it. Standards help create a common understanding for engineers and designers to build products and offerings. And of course, financial services are no different when it comes to the need for standards. I bet all of you know at least some of what I'm going to share. Debit and credit cards all follow a certain standard. American Express cards start with a 3, Visa cards start with a 4, MasterCards start with a 5. Certain digits give us a clue on the issuing bank and the account number. And most importantly, as some of you know, that last digit is the most important one, which helps mathematically determine when swiping or tapping if it's actually a valid number or not. The physical card also has attributes that allow it to be read using different types of readers in order to be accepted by swiping the stripe, tapping, or inserting the chip. All of these are standards that were developed by the industry and not dictated by the regulators. Obviously, government has some involvement and varying degrees of oversight in so much of financial services standards, but open banking is going to need to use that same ethos of the industry trying to come up with it. Some of this standard setting is going to be very technical in nature. For example, open banking will be easier and less reliant on intermediaries if developer interfaces always provided data in certain formats, standardized formats. Other types of standard setting might be more along the lines of best practices, such as norms for how data providers communicate and implement scheduled downtime or other disturbances that interfere with consumer data access rights. So I've learned quite a bit from all of the jurisdictions who have been thinking through implementing open banking. Many of you have done the same. I think we all are struggling around the world of how do you balance between regulations being too prescriptive, which can slow adoption or lock in old technology, or when they're not prescriptive enough, and then everyone is whining and moaning about wanting more guidance. There is something in the middle that tells you about what we need to get to. My philosophy on this is to set some clear guideposts that let people innovate around, but not be so detailed that it's inflexible or leads to messy or fragmented standards or prevents standards from sufficiently developing. We know that, for example, in Australia, regulators have gone to very great lengths to prescribe very detailed technical standards for data sharing in their open banking regimes. I'm a little bit less confident we could pull that off in the US with our industry structure. We also know that jurisdictions like the EU, I think regulators took a bit more of a hands-off approach. It led to fragmented standards, conflicting standards, different implementations that has impeded, I think, the promise of open banking. Of course, we do know that dangers exist when more powerful players weaponize industry standards. We have to be vigilant that standard setting does not skew to benefit the dominant firms and their power, because ultimately we want new firms emerging and new ways to deliver value to the banking system and to consumers. Let me bore you a little bit with some legal stuff. Weaponizing industry standards is not a new problem. There's an example from the manufacturing industry. It's a Supreme Court case from 1988 called Allied Tube and Conduit versus Indian Head. The court in this case discussed how incumbent steel conduit producers used a standard-setting organization's procedures to exclude an innovative plastic-based conduit, locking the market into an older technology. There's another example from 1982, the American Society of Mechanical Engineers versus Hydro-Level. Here, the court highlights a situation where an official of a standard-setting organization conspired to release an interpretation of the organization's code for water boiler safety devices that was unfavorable to a competitor of the official's firm. So basically, there was a guy, he was part of the standard-setting organization, but also a market participant, and played a role to impede or undermine a competitor. So that's a standard-setting organization official used his position to lock out a competitor with a different approach. and really block them completely from the market. And interestingly, the court held that the standard setting organization actually could be liable for those acts of their officials. So in financial services, I think we've all seen how the owners of networks and financial plumbing, they have a lot of power often over the rules. And those rules are, in fact, sometimes more salient than the official regulations of the regulators. And we continue to hear reports about all sorts of ways incumbents are thinking about how they will coordinate to limit consumers' exercise of their rights to access data by forcing data sharing through bank-owned or other incumbent-owned facilities. Now, this type of behavior by dominant firms or standard setters, I think, is going to undermine the promise of open banking. It's going to undermine the ability for us to achieve what we want for the public and when we want for firms and for the industry. So obviously, banks can choose their service providers of how they will turn on some of this data sharing, but we're going to be watching to make sure that those service providers are not being used to anti-competitive effects. Some of these tactics obviously may also break the law, and we have to be careful that everyone is following it. Our proposed rule that the CFPB has published anticipates that there will be formal recognition of standard-setting organizations, which will allow people to know that if they adhere to those standards, they will know that they are on the right side of their legal requirements. But ultimately, we have to only recognize ones that are being fair. So today I want to share a tiny bit more detail about how we expect to recognize standard setters. Well before we finalize the rule this summer, around then, or this fall, we're going to codify the attributes that standard setting organizations must demonstrate to get that formal recognition. And after we codify those attributes, we will then formally recognize any standard through that process. And this is going to help us get to a place where the industry can align and know where will they be able to be compliant. So we're hoping to recognize officially those standard setters as quickly as possible. This will help move things along, and we plan to do this as soon as practicable. We are looking to start that process before we even finalize the rule, so again, it can move in quick sequence. Now, based on the formal feedback we received in the proposed rule, I anticipate the final rule will identify the areas where standards are relevant to the requirements of the final rule. So the attributes we are considering for standard setting organizations will not be a surprise to anyone who's read the rulemaking proposal. So we're considering how standard setting organizations should have balanced governance. In other words, there shouldn't be one entity or a set of entities that can dictate everything or that have complete power over the rest. We're going to be looking closely at the makeup of the board or group that makes determinations with respect to the setting or modification of standards. We're going to be looking at the funding structure of standard setting organizations to make sure that the organization isn't just funded by one set of actors in it. And if the composition suggests favoritism or funding is dominated by one player, you should assume that's going to be a problem. Additionally, if there's no meaningful way for the standards to be considering the interests of small firms or firms that don't yet exist, that's going to be a problem. If there's no way in which some of the data security or privacy concerns are going to be reflected, that is also going to be a problem. I urge all of the interested standard setters in this space to look hard at their own governance and procedures to ensure your standard setting organization is not just a puppet for a powerful player. So in terms of the process for maintaining recognition, we want to ensure there are no bait and switches or other kind of mischief. So we may condition recognition based on certain adherence to standards or make it time limited under certain circumstances. So while interoperability is an important component of a healthy open banking system, I would eventually like to recognize more than one standard. I do think single standard has its downfalls. Too many standards also has some issues with it. But I recognize that not every standard setter might be ideally suited to create standards for all parts of the ecosystem. So we are going to be working hard to make sure that we're working with all sorts of standard setting organizations to make sure that it all works well. As I conclude, I just want to emphasize the existing standard setters shouldn't take their place in the market for granted. My strong preference remains for market-driven standards, but we're not going to be able to rely on standards if they're structured to allow one set of players to dominate. So if we're unable to identify standard-setting organizations, we will be prepared to step in to do that work, but I imagine that will take a longer time and we will not see the progress we want to see. So we think the industry should be prepared to think about these issues now, get ready for it, stand ready to talk to us about it, and be prepared to apply for formal recognition as soon as we finalize the rules. Thank you.
Well, thank you. I think you've given everyone in the room a lot to think about. From the perspective of the work that FDX has done already, I think we announced this morning that we have 79 or 78 million consumers now sharing their data through FDX standard APIs, which I believe is more than all of the other open banking regimes in the world combined. And as an Australian, I always sound very parochial when I mention this, but there is a lot of learnings from other markets in terms of, what happens once there is sort of over-prescription of standards. So we hear you. We thank you for making the time today, but I think there is also a lot of recognition for the work that has gone on from a largely volunteer base to get us to this point. So with all of the things you just covered, I think we'll come back to some of those tacticals, what, when, hows, but would love to hear you kick off with just what's your vision for like the long term of open finance in the US?
Yeah, so I think everyone here probably gets there's not a ta-da moment. So it's obviously a path of moving through the process. Obviously, I recognize that the CFPB's rule is a key milestone of that. I think we're already thinking about what are the next set of issues that are going to arise. I'll give one example. If we are successful to create a more vibrant open banking ecosystem, you will potentially see way more account switching. There will, of course, be some real questions then about the speed of deposit flow, which will ultimately lead to thinking about what are the liquidity requirements that are going to need to be updated for insured banks in America. We saw 1 year and 3 days ago Silicon Valley Bank's failure, which is not really an open banking related failure, but one can envision that there'll be lots of different ways in which assumptions around retention of customers are going to change in a way that I think is totally good. And I think that is something that we're looking at all of the various pieces of the puzzle that I think over time need to change. Now, for the industry itself, I think we're going to need you to share with us constantly what is it that is going to be the next set of regulatory contours you need us to do. At the end of the day, our only thing we can commit to, at least while I'm director, is we're not going to shill for one set of actors. In some ways, we're going to do things that are going to make everyone a little bit not thrilled with, But I think that's the only way to make sure that the system is not slanted in one direction or another. And I will tell you, all sorts of open technology ecosystems, there's a lot of incentive to skew it in one way or another. I really encourage you, many of you have thought about this in other jurisdictions in banking, really look at some of the examples in other sectors. I find smartphones, standards, essential patents, 4G, 5G, LTE. There is a lot, I think, of things we can learn from communications networks, from electricity networks, elements of those that I think we should be drawing from as we create something pretty new here.
Yeah, it's interesting with those as analogies in that often people are locked in, though. They're locked into telco, they're locked into energy. We see from the Amex platform, the average American has 5+ financial relationships. And for them to get a 360-degree view of their life, to be able to make the best decisions for themselves, to be able to get insights, they need to be able to have both access to that data, but also the ability for the industry to add value so you can get the insight, so you can get that next best action, so you can drive towards an outcome. And so much of that is truly based on an interoperable standard. Like, will this data actually flow and will it work? I know we get very focused on deposits and deposit movement, but what we see is institutions and fintechs are also a depository for data, right? And data as proxy for money. There is a huge competitive advantage to be able to add more value. Right? So it isn't just about protecting, the deposits. It's how do we extend relationships? How do we create better outcomes? And a lot of that does come from innovation. Like, the competitive landscape here is unlike any others on Earth. So we all have a very big job to do in terms of enabling competition and enabling innovation. You talked about the role of smaller institutions and newer companies. How do you reconcile that tension between safety, soundness, protection, privacy, security, with innovation and competition?
I actually don't see too much tension with it. I think there are probably some fixes that need to be made in order to accommodate that increased competitive intensity. I actually worry more about things that will just throw water on it. So, for example, we have a lot of fears at the CFPB about the foundational AI models probably going to tip toward 3 or 4 players, and the extent to which they are vertically integrating into financial services in a way that I think will impede capital formation to invest in new ventures. So we also worry about the extent to which there'll be some layer of the system that then has so much control, and the extent to which they start moving upstream or downstream. We just see it through lots of parts of the economy in any kind of network-based business or platform-based business. So when we reflect to the earliest days of the internet, it was really, there was no entity that had lots of control on any parts of the stack. It was very much a project of people without much commercial interests in the structure. That's going to be, I think, the real thing that we all have to keep our eyes peeled for, about how might that interfere and how might that, impede the development.
So as the rule was being drafted, there obviously was a lot of attention to, smaller players, emerging players. How do you see their participation in this ecosystem? Again, we have a largely volunteer-run, let's just say, industry standard group here. What are you specifically looking for in terms of contributions? And in my past, I'd founded a fintech that in the future, like under the proposed rule, it would be significantly harder for me to build that fintech.
Yeah, it depends on the reason why. We are trying to do the following, which is we want to make the barriers to entry low for the small players, but when we look across sectors where there is this openness, we don't want the scam artists taking the biggest share. So If you take a look, for example, at electricity markets in the US, there has been various regulatory efforts to create competition on the grid. Probably if we were to poll this audience of how many people have actually switched to one of those other providers on the grid, it's probably pretty low because in many jurisdictions it was totally overtaken by scammers. So we have to think through, we want people who are wanting to actually be financial services providers to do it. We have to assume that the amount of folks who are going to want this data for other purposes, and how are we going to police for that? So we don't. The challenge we have generally with the financial services industry is that it does, even though it has rivalry, it has a cliquey feel. So there'll never be strong arguments to, we need to license people. We need to register people to know who they are. Because otherwise, as the regulators, we are the ones who have to hear from all of the fraud and abuse that goes on in these markets. And in the digital world, it's real.
Well, and I mean, I think that is a big part of the work that we all do is around certification and, how is there visibility and transparency through the ecosystem. And
that's where the tension is, because I think openness, sometimes you think no gatekeeping, but we also live in a world with, in a country that has anti-money laundering laws, that has Bank Secrecy Act and others. There is a dimension of having to know certain things, and we have to balance that and have to recognize that policing for terrorism finance is not going to go away because we want open banking. So give yourself the reality check about we can't ignore the rest of these things. And ultimately, if there is some gatekeeping, we want it to not be weaponized by incumbents against their competitors that haven't even formed yet.
Totally makes sense. So the operationalization of the rule, it was not a short rule. There is a lot in there. And I think the operationalization is going to be easier for some than others. And, we've seen investment from across the ecosystem in terms of standing up APIs, in terms of doing the necessary work through even bilateral agreements to be able to enable a one-to-many and a many-to-many ecosystem. Obviously, there's many that haven't got started on this journey as yet. So the draft rule does provide at least guardrails in how to start, what needs to be surfaced. There's a few areas of the rule where there seems to be even grey area around secondary data use, around liability, around third-party risk management, deeply complex areas that for anyone getting started or trying to sort of jump in and start to build out an ecosystem that will work for them is going to be, it's going to be a challenge. Do you see this grey area, if you were to time box it, what does it look like for, a mid-sized institution or a larger fintech with significant resources that are going to need to comply, but there's still question marks around things like liability?
Yeah, so each of the issues are different in that case. I think we heard a lot of feedback and general hand-waving about liability. We are actually thinking about liability issues very specifically. I cannot issue liability waivers for terrorism finance laws. We're kind of looking, what's the specific liability risk people are concerned about? So whatever the list may be, breaches, errors, and we're trying to incorporate how our thinking should be reflected in any final rule. We heard some things. I don't know if we'll be able to scratch every itch people will have, but we're trying to incorporate that thinking. You mentioned the issue of third-party risk management. Obviously, third-party risk management from a bank's, like an insured bank's perspective, they have a framework that they use, which we at the CFPB don't dictate, but we're having lots of discussion with the Fed, with the OCC, with the bank regulators about how does this all work together, and can compliance with the rule be presumed to be appropriate for certain elements of risk management. I think you mentioned, I'm trying to remember, you mentioned a third area that was
Consent,
third-party risk management. I forget what you said, but
secondary use, data use.
well, secondary use, I wanted to give that as an example of we're going to try our best to be bright line. And I think everyone will always say there's some gray area. That's what kind of adults end up doing and making their own determinations of where do they want to be on that side of the line, what risks do they want to take. You know, again, the tension is being overly prescriptive. Our goal is usually to try to get to bright lines. It's very hard to do that. So, you know, we're still in the rulemaking process, but I hope that people are looking at the proposal with a mindset of we're not going to sacrifice too much. We want consumers to have their access rights, but we also want to make sure that it's just not a haven of fraud and data misuse.
And are you looking at this from almost a priority stacked use case perspective in terms of, again, financial services is very deep and very wide from a use case perspective. I think at the base level around data access, it is getting data from point A to point B, but that point B has a myriad of different use cases. Is your office thinking about almost like stack ranking? Like, let's start looking at, I won't be prescriptive, but like lending use cases first and then working through, or are you looking really across the spectrum?
So I think what you saw articulated when we made the proposal was what would be able to create the most value early on. So for example, we did not delay the proposal by a lot to think through additional products, other things, because we saw that a core part of the value was getting transaction-related data, getting balance-related data. So in some ways, kind of in the, we 80-20'd it in some ways to think about how do you take the steps forward. Look, you're right, there's going to be so many use cases, and I do think communications and energy provide some useful thinking around this, which is communications infrastructure ultimately gets used in so many heterogeneous ways. Energy gets used in so many heterogeneous ways, residential, industrial, and each requires some base levels of understanding reliability, of understanding how things are going to move from point A to point B. So I think in some ways we've taken a more bigger picture set of thoughts than being super micro about it.
So it's interesting that you mentioned telecommunications. Some of the founding DNA of FDX was actually people that helped stand up the Bluetooth standard. So there is a lot of, and I think Steve Smith's in the room, I think there's a lot of understanding of what that looks like. To go back to your comments, you know, you'd mentioned that you were considering multiple standards. If you could make an analogy to financial services, obviously FDX, we have looked at interoperable standard from an API perspective. We've taken on task forces from everything like, you know, privacy, consent, user experience, like a lot of the sort of the touch points between how people share the data. What other standards are you considering in terms of?
So I think the way to think about it is we don't want to be in a situation where you kind of grant a monopoly to one thing. You want to create the space that if the market does move, or if that there are some more specific use cases of it, that there is that opportunity for them to get that sort of same regulatory treatment. So we don't have a kind of gap analysis. We're thinking of here's where the market has moved, and we think there's some white spaces here. We just want to make sure that not all the eggs are in one basket. Part of that is risk management for us because, you know, it's going to require some real thinking about what will be the next disruptive force and trying to avoid the pitfalls of some of the lock-in.
Is there any particular standards group that you admire within the
I'm not
financial
allowed to
services?
admire.
Okay.
I have to kind of, especially because, as I mentioned, we will ultimately need to adjudicate through a process to recognize if that's how we end up finalizing the rule. So I've tried to show my cards as much as possible, which to me, governance is really important. So we have seen places where outside of the financial industry and inside the financial industry too, where sometimes the participants are truly just takers, or they accept whatever is determined. There's no role for their interests to be considered in the process. You know, if you rewind many years, a lot of the payment system is governed by rules by this group called NACHA. And there was long concerns about, is NACHA just a tool of the very biggest banks? So I think over time, you want to make sure that, especially, it's always very hard to get meaningful representation from the firms that don't exist yet, and frankly from the public. And I think that is always the ways in which we look at this. We have a great example of a really bad or a really unsuccessful organization, in my view. It's something called the Appraisal Foundation. This is essentially sets the terms of who gets to be an appraiser and sets the standards of who gets. They have full dominance over the whole thing. They have a board that you basically pay money to be on, and they use certain ways and tactics that are obviously not really thinking about the homeowner or the lenders or all the parts of the ecosystem. So I'm not sure. I mean, we have made no final decisions. My guess is that a pay-to-play board is probably not a best practice. My also guess is that you will need to have some ability, as I mentioned before. A lot of times standard-setting organizations, you know, it's sometimes a small group of people. You want to, and volunteer-based, you want to be able to figure out something that will sustain over time, and figuring out those mechanics can be tough.
That's great, thank you. So we have financial technology companies, financial institutions of all sizes. We've got nonprofits in the room, consumer advocacy groups. What message, would you want these folk to take back to their executive leadership?
Yeah, well, I guess it depends where you sit in the ecosystem. When I talk to sort of the players in the system at the C-suite level who are really kind of interested in this, but may not know a lot of the details, they'll admit that they have people who are really, and they're willing to invest and commit to it. I think the challenge of each of you in navigating your enterprise is that at the end of the day, there's going to be some conflicting financial incentives, particularly if you're a large bank, particularly if you're a dominant payment network. There's all sorts of places. I mean, if you think about just the challenges the large banks have had in thinking through the business case on Zelle, so banks own Zelle through a joint venture. Zelle transactions don't necessarily earn them interchange the way if you were to swipe. Yeah, that's going to impede their desire to have Zelle be available or any other real-time payment solution be there at point of sale. I think that's kind of hard for many people to navigate in their own enterprises. And how do you actually, for most of the entities that take up our time at the CFPB are enterprises that have 10 times the employees that we have. I mean, maybe not 10, but whatever, 8. They're big organizations. Navigating that will be challenged. On the other hand, you have small enterprises, nascent or mid-stage who really haven't necessarily fully baked how are they going to exit. And many are going to be looking for a liquidity event, for an exit strategy. Some of that is going to end up sculpting how they behave down the road. And while the values they are espousing now about openness, about fair play, obviously things can change over time. It's a normal part of markets. So I think figuring out how to lock in some of the ethos early, that's in many ways the challenge. And ultimately it's going to be tough to navigate no matter where you sit in it. You know, there was a merger that was several years ago. I want to say 2019. Visa sought to buy Plaid. It was grossly illegal. And I think that we had to try, the DOJ blocked it, but it really was something because it showed a very clear way that both firms were really trying to do something that would have fundamentally undermined, I think, the shift to open banking. I think both firms are better off that it was blocked. But I think we're going to have to look at all of those ways in which major players are going to try and sculpt the system. And I think that's going to require a lot of work on every single person in here.
So switching gears a little to the consumer, there was a lot of hand-wringing in the UK with the release of their open banking rules.
Yeah.
That, people just think open banking means that branches are open longer on a Saturday. Ha, 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 right? There was like this very, almost very suspicious view of what open banking was. And a lot of we need to do consumer education. Do you see how people will engage with their financial service providers as something that needs to be overtly educated on? Or is your expectation that it will be built into the experience and how consent works and things like that? People, do they even need to know what open banking is, or should it just be something that they experience?
I'm not sure I have a firm view on that. My lean is the latter, because this is just kind of an industry term. But I think the way people will ultimately live their financial lives is they will get a better sense of what their choice set is and how easy it is to do. I mean, I don't think the public needed to know that the Federal Communications Commission issued an order to the telecoms that they must allow wireless number portability. They just now knew that they wouldn't need to lose their number. And I think over time, a lot of things we do today will become relics of the past. Carrying a wallet with 7 different plastic cards. This will all be gone someday, but thinking about what will take its place and how people will adopt it and how people will become familiar with it, it's just not going to happen overnight. But I struggle to sometimes think, what are we educating people on? I think now we will just there will be early adopters. There will be those who then write about the experiences and tell others. There will be ways in which people consume the experience from that. My hope, though, also is that there will just be more competitive intensity and people will just be seeing better rates on their deposits and their loans because bigger players are going to have to look behind their shoulders. So I don't have a great answer for you, but I see the benefits coming in different ways, and I'm not sure people need to know about it.
Agreed. So can we talk timing a little? So you gave some indication in terms of things are coming fast. You're looking at summer or fall for final rule. The scope of the existing rule is very much grounded in retail. So taxation, investment, payroll, there's other data sets that are incredibly important for someone to get their 360-degree view. What sort of timing are you looking at to potentially expand the rule, if at all?
So I'm already thinking about the next set. If I can there's some kind of subsegments of the market that have certainly we've gotten questions about. There's no question that a big one relates to retail securities. We're thinking a lot. I'm thinking a lot about that in terms of how might someone get insight into the securities that they hold through their defined contribution plan, through any sort of retail investing. I think that is actually very valuable information. Of course, many of those are not consumer financial products in the same ways, and that's what we do. I think there's other types of data, obviously, that are going to be useful for firms to be able to have. So, we really welcome input on the sequencing. Of course, there's great interest in knowing more detail in an open data way about people's mortgages, auto loans, others. I will share with you that a lot of that data will, of course, be able to be captured in their transaction account. But I think the window into what kind of rate they're paying, the speed at which they are paying, some of that will be needed. So we really welcome views on this, but I think when I think of the market share of data that is out there, those are some of the ones I think about.
So we saw, I'd say, an extraordinary number of responses, especially around EBT benefits. How do you see open banking driving financial inclusion, especially for unbanked, underbanked, thin file customers?
It's funny. I actually think about open banking as in some ways going back to the basics of banking. It's really funny. I'm sure many of you who have been in financial services a while you sort of raise your eyebrows when people talk about advanced computational methods and artificial intelligence being like a new thing. It's like we've been doing a lot of that, albeit with fewer data points. We've been using these kind of algorithms for a long time. We've had an embedded opaque credit score that is in common use in the US and actually is used to standardize mortgage-backed securities offerings. It's so embedded in the system. What is really good, I think, about the direction we're going is it will allow a lender to extend credit with a clearer point of view on the borrower's ability to pay it back. In some ways, it's actually, people talk about the proxies of kind of using weird data. It's actually the most traditional data that is going to become very easy to unleash. You will essentially get a window into someone's debits and credits, and that's going to get you a greater sense of their residual income, a greater sense of their overall assets and liabilities. And I think, I hate to say it, I'm kind of most excited about the boring part.
So we all do boring stuff all the time and get excited about it. It's all good. So we've got a last few minutes here. Any final thoughts or things that you wanted to cover today that you didn't get a chance to go through, or again, just anything that you want to leave the audience with today?
Yeah, so what I want to continue to have everybody think about is really how does what we're doing in this effort sync up with the future of payments? I think payments and the layers of payments is going to be just a very critical part about the future. I have been a little bit worried that the U.S. is behind on payments. I mean, we are obviously behind, but even how we're thinking about it, are we just kind of lurching to a world with different types of private currencies? And I'm not even talking about anything crypto related. I'm talking about what are we seeing on gaming platforms and emerging uses of payments there? What are we seeing with tying of how, for example, Apple has required people to pay a toll for using Apple Pay and point of sale and other use cases. So open payments is also going to be something that we need to constantly be thinking of those rails. I didn't catch who said it in the last panel. I'm glad there was a discussion about core service providers. We do have a long tail of smaller banks and credit unions here. The vehicle by which they implement so much tools and technology is through these major core service provider vendors. Thinking about how they are a vector of change in all of this is going to be important. But also, I mean, we will need all of you to figure out, what do you want kind of privacy and security enforcement to be like? I do think that people will be turned off when there is incidents where their data is being misused. And right now, we just don't have a kind of robust way in which those abuses can be enforced. It's a limitation in our existing laws. I think many of us would probably agree. There's a Gramm-Leach-Bliley Act says you have to give a privacy notice. I might be one of the few people who routinely reads them because we set those rules, but I think we're kind of outdated on some of this.
Okay, so we certainly have a lot to think about, to discuss. I want to invite everyone, and you're also welcome to stay, although Dan tells me you've got to leave, where the board is hosting a reception next door for networking for everybody, literally in the next room, don't leave the building. But want to thank you for coming here today. A special call out to your team. Your team does an amazing job in terms of really understanding the complexity of this issue, of this market, and of this ecosystem. So thank you for coming.
Well, thank you so much.